Hello there, Forex traders. Welcome to this Admiral Markets video. We're going to take a look at this week's expectations and Forex movements from my perspective. My name is Chris. And last week, of course, we had a very interesting Euro interest rate announcement and NFP plus unemployment rate figures for the US. So what does that mean for the Forex market? We're going to take a look at that right now at the weekly overview, USD strength, and take a look at the majors. But before we do that, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and I do thank you for your attention on that. Alright, so let's start with the euro dollar, and we can see, of course, the interest rate sending this a lot lower here, and the NFP had some downside effect as well, but didn't break that bottom, and that leads me to suspect that we have a potential for the euro dollar maybe to correct higher. If it does correct higher, I think any up move should be seen as a potential to short. Any rally is a potential to get into the downside at a better price. So basically, I would think at minus 618 around 135.50, which is equal to this resistance, and top as well would be a great level, but also even this one minus 272 around 135, which equals to this bottom right here. That entire zone seems to be like a resistance 135, 135.50. If price were not to correct that high, then I'm looking for a break of this purple line to indicate that, and the break of that trend line could see or confirm that downside continuation down to, for example, 131.50. 131.50 is just above this support, which is still an important level in the market. And if we break that 131, then we obviously see the next support right down here at 128, 127, which would be also the next target upon the break of 131. The pound dollar showing something similar. It is in a triangle in a way, and a break of the bottom would indicate that continuation to the downside would be very interesting in that. But if we break to the upside, there could be a bit more correction up to the 78.6 Fibonacci percent retracement at 161.80, after which I would expect downside. So here too, just like the euro, expecting either a bigger correction up or a break to the downside. One thing of importance to the downside is that we have to break 158.90 for a real confirmation of a big potential to the downside, because that is the weekly and daily bottom. Then I also want to quickly talk about the dollar again. We've been monitoring this one for weeks on end, but you can see that the currency is moving up, but we are respecting this trend line still. So I'm looking for a break above the trend line and a break of the green line to really get that confirmation of bullishness up to 110, maybe even higher on the dollar yen. But we're right at that trend line right now. So soon the currency will tell if we can break through that or not. Maybe this week we can see that continuation to the upside, and that would be very important, because if we don't break, we can still see this as a triangle for more downside down to 91.90 and then see the bounce up. If we then zoom into the 4-hour chart, you can see I would probably want to see a break of that triangle, preferably anywhere above 98 for that bullishness to be confirmed. Last but not least, the odd USD. I was selling it right in here, in fact, at 95.33, but this spike up took me out to break even just before it actually fell tremendously during the news events, and looking very bearish, just like all of the others that I mentioned on the euro dollar and pound dollar. And here too, I would expect 94.13, for example, to be a pretty good resistance, because that's the target of this correction if we do move up that far, and I would expect a target around 93, which is this minus 618 at 92.80 and 93.20. Those are the targets for the odd USD potential downside. But definitely looking very bearish, looking at this break, hook back, continue, break. This could be a hook back for one more downside. From the weekly perspective, we can see that 92.50 is a very important level, because that's a fractal, that's a weekly support. So once we break that, not only could be there short-term bearishness, but there could be also long-term bearishness in the market as a continuation of this thrust to the downside, maybe down to 85, for example. So that's a good level to keep an eye on. Well, that wraps up this video. Make sure to take a look at the special recap later on today, on Monday, with Trantra on EU, GU, and AU. Tomorrow, intraday live trading with myself. Wednesday, 2. Thursday, moving averages. And Wednesday is price action, by the way. And Thursday, of course, in the evening European time, an educational webinar on how to plan your trades. All right. So thank you for your attention on this video, and looking forward to see you in the next upcoming webinars. Good trading all, and talk to you soon. Cheers.